Good evening. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Tuesday, the 9th of July, 2024. Well, we saw Fed Chair Powell speak today before the Senate Banking Committee, and he made it very clear he's not going to tell you what the next move by the Fed is going to be. So if you were looking for that, you're not going to get it. He then went on to say, just as I had laid out what he would do, a forecast of it. He said labor market is weakening. Inflation is falling. It's still not where they want it to be. It's nowhere near the 2% number that they want. They need more data to be certain that it's going to come down. And he said they are very aware. They don't want to overstay their hand and hurt the economy, nor do they want to cut too soon and cause inflation to lift back up. So more data is needed. You're going to hear the same thing from him tomorrow morning. And speaking about that, tomorrow you get the Mortgage Bankers Association numbers at 6. You're going to get the May wholesale inventories coming out at 9. Fed Chair Powell picks up his chair, goes to the other part of the Congress and speaks in the House of Representatives. In the EIA, the weekly petroleum stock estimates come out at 9:30. We had the API today. They were down in two categories, the oil and the gas, but they were up in the distillates. And the Fed Governor Bowman and Fed President Goolsbee of Chicago, they're going to participate in a Fed listeners event. I don't even know what that is, at 12:30 tomorrow. So you've got to be on your toes because tomorrow's not what the day's about. Tomorrow's the day you make sure that your toes are clean, you're ready to go, you're ready to dance because the dancing will begin Thursday morning at 7:30 when we get CPI, and then you're going to get a whirl away on the PPI number on Friday. Those are the two big events. And of course, on Friday, we kick off the earnings season again. It seems like it's always here. And you know why? These companies don't report quick enough. I think it's crazy that sometimes you're sitting there, you start the market off, and a month later, you're still getting earnings. It should all be quicker so we can get past that and trade other events in the marketplace. So that's what I'm seeing in it. Are we watching paint dry over today and yesterday? To a degree. And I think you see that the volatility has certainly been very low in the stock indices. We're still looking pretty good in Amazon, although it couldn't hold its rally today. It gave back a little bit. NVIDIA had gotten up to 133.82, gave back about half of that. Okay. The market that's been on fire is Tesla, and now it's only got worldwide about a 50 market share. I was reading a report late today. That's interesting. BYD is on fire and really picking up world events. China has, they believe they've gotten battery storage breakthrough down to the point of low cost where they're going to be a threat worldwide. They're going to be selling those big, if you've ever seen them, a lot of these things look like mobile homes. And there's just stacks of them, and that's how you can store energy. They're big batteries, if you think about it. But they have gotten lithium prices down dramatically. They have found ways to not use as much of the product. They are making tremendous headways with it. So don't ever count them out of the energy part. And remember, they're a car monster right now. Rivian up another 20 cents at the expense of GM today. When we look at the metal market, sort of a mixed bag, but basically just wobbling right here, not doing a lot. Meta still looks good. I want to see Boeing down a bit more here. As I told you, I like Boeing long term, but not in the 180s right now. I'd love to be able to at least crawl into the low 170s, mid 170s with it for a long-term pull and buy a bit here and there if it can keep falling. And forget I own it for about a year. In GLD, all right, and by the way, another wheel came off. So now on that plane, is it Boeing's fault, plane built by Boeing, or is this maintenance? And they're going to have to look at this real carefully to try to figure out what's going on with that. Wheels coming off aren't good things. Planes need their wheels. You know, one of the things I mentioned to you in gold is you gap a lot. I think you see that in the chart. At least this gap got filled as it came back here, but you didn't fill this one. And the question is, if you were to pop up, what happens next? That's what I'm looking at, what can happen. The trend is up. The market is trading over the 18-day average of closes. So as long as we don't take out the highs of today, I don't mind if you'd fall back to the 215.89 level, but if you take that high out of today and then drop, you hurt the uptrend. That wouldn't be a good pattern. The resistance, very clear. The upper Bollinger Band, you got 1 day over it and you came right back into it. And in momentum, you're correcting an overbought condition. Anytime you have either of the numbers that make up the slow stochastic, the red line is called the K line, the D line is the blue line. The difference between the two, it's the same formula, but the way that I use it is one uses 3 periods of the data, the other 5. Got it? So another thing some people do is they'll plot a center line, if you're doing this, with the 14-day average. I don't do that. I like the 18 much better than the 14. But I change everything because I have learned over 50 years of doing this what I like in a chart, and that's how I'm going to stick with it. On RSP, we have lower low, higher high. You keep coming up, and this is, remember, this is the non-weighted S&P. You keep coming up and fighting to get over the 18-day average and the 100, and you're not being successful. So unlike the S&P, which has been a runaway, and you'll see that, new high records all the time, this isn't. Why? Because it doesn't have the weighting of the artificial intelligence stocks. Nike, as I told you, I've got to drop this and put something else in it. It's going to develop a new trading range, and that's what it's doing. These days are gone for a long time. They've got to resurface themselves. They're getting a new head of retail marketing now, a gentleman that was there before that understands the importance. Where they blew it is they said goodbye to the shoe stores during the pandemic. We'll do it all online. Well, that worked real well. Rivian. Higher lows, higher highs. You can see what you've got here. You're overbought, but unlike this, I think this company's going to be one of the big survivors and a big player in this market. Next, we have Freeport. Okay, if you break down under Monday's low, be careful. You could easily get back to the 49.28 level. You are overbought. It's difficult to get through the Bollinger Band. It could be done, but it's not an easy task on the first challenge. Lennar Homes still in trouble and didn't get any help from the Fed today when they said we're not making any decisions, and you're keeping a bearish embedded reading. So I'm still looking at the market down. The battleground is, to me, very clear. The 200-day average in gray, and this charcoal, the Bollinger Band. And you can see it keeps butting up against it and coming back down. But that's your battleground. The home builders, all right. Are we losing the embedded reading? Not yet. Do I think the pros were selling today? I think that they were, and we'll see if the market can follow through to the downside at all. In XLF, the financial services, again, you have sideways action. I love when you see it on the Bollinger Bands and you see how it's wrapping up. But the bias is up. You are overbought. The trend is up. Can it push this out, or is it going to fail right here? Obviously, one of the things that will help this market is lower interest rates. In the industrial sector, to say that the market's got problems is an understatement. It can't even get over the 18-day average for any length of time, and it has zero problem trying to retreat back to the Bollinger Band. Momentum is down, but it is oversold right now. In the energy market, we've been backing off. So these companies, and this is what this is about. This isn't about crude itself. This is the companies making money. Well, it's saying that they're not doing as well as you might think at these prices. We'll find out why and if that's right during the earnings season, which is upon us starting Friday. In the gold miners, you're riding the Bollinger Band. You're not staying over it. That's all a good sign. The market is in an uptrend. It is overbought, however, because it's up at the Bollinger Band, and you've got your readings here that are high. Same thing in the silver shares. You come to the copper market. You can see you got overbought, you ran into the buzzsaw, and you backed off immediately, that combination from the Bollinger Band. Now, if you take out the lows of Monday, you might go back to the 45.68 level, another $1.30, $1.40 from here, and see what the market's capable of. When we get to the bonds and notes, well, it's very clear. Battleground up to the 18-day average, down to the 100 and the 200. And why would you take a big gamble one way or the other right in front of CPI and PPI? You might, but tomorrow's the day that they'll position themselves, hoping that they got it right, whatever that might mean. For the morning CPI figure on Thursday, in the dollar index, couldn't make it down here. Remember what I was saying, I don't know if you're going to make it that low. It's trying to get back to the 18-day average, but the trend is down. I'm not keen on the risk, to sell it here and put a stop all the way above there to just get back to the Bollinger Band. The risk reward doesn't make sense. And in FXE, it's the flip-flop. You got up to the upper Bollinger Band and you're faltering. You'll probably find support initially at the 100-day average, and if that gives ground, you could return to the 18. But I don't see anything big on the horizon for the dollar or the euro until Thursday. And at that point, it all begins between CPI, PPI, and the ramifications. I'll be writing about it. Linn and Associates, my brokerage firm, they'll be writing about it in a lot of reports. One thing I like is how we come out with our analysis. We do, I don't know if you're aware of that, oral analysis. David Hightower, the Hightower Report, is on our charting service, and he comes out with daily broadcasts, about 3 a day. I do, as you know, a number of them, like you're seeing right here, and you can get them on our website. I'm a division within Linn that we've got. And in the charting software, a lot of this is there. I know a lot of my stuff, you can see right through that. So how do you get all this? How do you get the reports? Well, we do send them by email. They go into the charting service as well. You can get a free trial. We want to show you what we're about by going to iraepstein.com. Go to the top left, you'll see free offers. Move your cursor to the top at any time. Up here, you'll see an icon. Give it a click, and you'll be with us. I'm Ira. You have a great day. I'll talk to you tomorrow.